I want to give you a heads up, tax refund surge is coming. The early estimates are in, and I can confirm this is real. In today's video, I'll explain exactly why this is happening, who qualifies, and what you can expect when you file your taxes in early 2026. The big change, everything starts with President Trump's One Big Beautiful Bill, passed in July 2025. This is the biggest tax overhaul since 2017, and it changes the rules for millions of Americans. According to JP Morgan, the average tax refund in the upcoming 2026 filing season is projected to be $3,743. That's $500 more than last year, about a 15% increase. Remember, this is just the average. Some people will see less, but many will see a lot more. Why refunds are growing? To understand this, you need to know what a tax refund really is. It's just money you overpaid. If your employer withheld more than what you actually owed, the IRS refunds the difference. Here's the key. Payroll systems in 2025 were still running on the old tax rules from January through July. The new deductions weren't law yet. Now that the law is backdated to January 1st, most people already overpaid, which means bigger refunds in 2026. Example, let's say you worked overtime from January to July. Under the old rules, you owed $2,000 in taxes, and that amount was withheld. But under the new rules, you only owe $1,500. That extra $500 is refunded to you. Multiply this across millions of workers, and you can see why refunds will be higher. Who benefits the most? Seniors extra standard deduction of $6,000 if you're 65 plus and single, $12,000 if married filing jointly. Tipped employees tips, up to $25,000 tax-free. Phase-out begins at $150,000 income, single, or $300,000. Married, not an itemized deduction, so standard deduction filers qualify too. Overtime workers overtime pay partly tax-free, up to $12,500 single, $25,000 married. Income phase out at $150,000 single $. 300K married applies only to federal income. Income taxes, not Social Security, Medicare, or state taxes. High tax state resident SAL deduction cap jumps from $10,000 to $40,000. Covers state income, local taxes, and property taxes. The parent's child tax credit rises from $2,000 to $2,200 per child. Full eligibility up to $200,000 single, or $400,000 married. Car buyers, if you buy an American assembled car in 2025 or later, you can deduct up to $10,000 in auto loan interest. Applies only to new cars, not used ones. Phases out at $100,000 single / $200,000 married. Economic impact altogether. These changes mean an average refund increase of $500 for about 117 million refunds. That's essentially like a mini stimulus package for Q1 2026. Economists expect it to boost GDP by 0.5% in that quarter. Looking ahead, one last thing. Enjoy the big refunds in 2026. Because they won't last. Starting in 2026, payroll systems will adjust to the new tax tables. That means your take-home pay will go up throughout 2026, but your 2027 refund